Hey guys, welcome to YouTube again. My name is Eddie from Eddie Finance. In this video, I'm going to share with you the 3 common mistakes investors will normally make when trading shares. The video is made in collaboration with MarkMelbourneTV. I found Mark in YouTube when I was searching for cryptocurrency, and I found that Mark is quite knowledgeable in that. Every Saturday, Mark will upload a video or news about cryptocurrency, so I do recommend you check out Mark Melbourne TV on YouTube if you want to learn more about Bitcoins, Litecoin, Ethereum and all other cryptocurrency. I'll leave the link below for you to click on Mark. Mark and I agree there are 3 common mistakes that we all should be avoiding. When I started share trading, I know nothing about shares. What I do is open an account, listen to my friend and buy the shares and see how the share performs over time. Through the experience of trading shares about 5 years now, I wish that someone would have told me the mistakes so I don't repeat the same mistakes. This is a video for you guys as a beginner if you are trading shares or you're thinking to trade shares, and let's get started. So the first one is listening to all the noise. You shouldn't be listening to all the noise there. When I say noise, means listening to your friends, listening to your family, or maybe watching too much YouTube in terms of what shares to buy. Remember, all of those opinions are just an opinion. No one can guarantee you that you're gonna make money. You have to do your own research. I remember when I first started trading shares, I listened to a fund manager on YouTube, and this fund manager kept telling the people that why this share is good, why the share is undervalued, and why you should buy the share. Because I don't have the knowledge, all I can do is to listen to the recommendation. And you know what, I went and bought the shares. I bought 5,000 of the shares. 2 months later, the share price came down 20%. I've lost 20%. Then this fund manager keep coming back again to the TV or YouTube and saying that this is a good time to buy again, and I keep buying the shares again. And to tell you, until now I still hold the shares because I have lost about 30%. It's because I haven't done my homework, so I wouldn't blame the fund managers to recommend the product. You should treat trading shares as buying a piece of a business. You need to do your own research. You need to go and have a look at the company financial report. The best thing to do is to look at the past performance of the 3 to 5 years financial report, and you can see if there's a trend of the company making money or not. Though the past performance is not guaranteed that it's going to make the same profit in the next 2 or 3 years, but you have a track record that you can rely on based on the research, and when the share price comes down, you know when you have to buy more or when to sell the share when the price is down. The second mistake is allocating too much in a stock. When I refer to allocating too much in a stock, I refer to not doing the diversifications. You need to know the market value of the share, not putting too much money in a small cap, because putting too much money in small cap increases the risk of your portfolio. You need to diversify your portfolio, preferably putting about 5 to 10% in a small cap and the rest in a mid cap or in a bigger cap. I once allocated about 20% of my portfolio to a small cap below 100 million. Because it is a very high risk trade, I have lost 80% of that trade. And the third mistake that you need to avoid is doing an averaging down. I didn't say that averaging down is bad, but you need to know when you need to average down. Based on the fundamental analysis of the company, if you know the company is actually undervalued when the share price is coming down, you can average down. But if you haven't done your homework and the share price come down and you keep averaging down, you're basically not being smart to get out of the trade when the share price come down. Only average down when you know the share price come down, and that's a good time to buy after you do your homework. If you haven't done your homework, I would recommend you to do a cut loss for the trade to make sure that it doesn't eat up all the whole portfolio of your profit. I hope you're benefiting from this video by taking those 3 mistakes that we have made and you're not repeating the same mistakes.